Welcome to the second session of the inaugural Money Smart for Small Business, sponsored by Community Trust Bank. My name is Tyrone Tyra. I am the Senior Vice President for Community and Minority Business Development at Commerce Lexington, your local Chamber of Commerce. Tonight's class will cover the topic of banking services for small business. We have a great instructor to whom I will introduce to all of you in a few minutes, but first I would like to recognize Shirie Hawkins, Assistant Vice President, Commercial Lending Officer for Community Trust Bank. Shirie, would you like to say a few words?
I'll just say a few words. Thank you all very much for inviting me to join you. Community Trust Bank is very excited to participate in this endeavor. As Tyrone mentioned, I am a commercial lender with Community Trust Bank. I am housed in Versailles. Community Trust Bank is, for those that may or may not know, is the #1 SBA lender in the state of Kentucky. So that are domiciled or headquartered in the state of Kentucky. So I look forward to speaking with you this evening and answering any questions that you may have.
All right. Well, thank you so much, Shirie, for being here and participating with us tonight. You know, folks, Community Trust Bank has been a great partner for my program and a champion for small business for all of the 15 years that I've been here at the Chamber. Larry Jones, who is the market president for Community Trust Bank, came to us a few months ago and asked if we would put together something to assist small and minority businesses here in Lexington and Central Kentucky. With their help, we came up with the Money Smart program, and I think that you're going to enjoy it. And especially, I think you're going to enjoy a very capable instructor tonight. And for all the sessions, we have Shawn Rogers. She has agreed to help us with these sessions and assist you in operating and growing your small businesses. Shawn Rogers is the owner of Ascend Business Consulting LLC, has a passion for helping small business owners succeed, believing that knowledge is power. Shawn utilizes her 17+ years in small business and economic development to arm her clients with the resources for success. Throughout her career, she has advised hundreds of entrepreneurs and small business owners from all stages and across many lines. Shawn's area of expertise is business planning and assistance with access to capital, with an emphasis on federal government enhancements such as the SBA 7A and 504 loan programs. All what that says, folks, is in a nutshell, is that you have a great instructor. She doesn't even put everything on this bio that she's done. And I just want to say welcome to Shawn and turn the program over to her. Shawn Rogers.
Thank you, Tyrone. I appreciate that. Thank you, Shirie, Community Trust Bank, for making this possible, and Tyrone for your all's passion for small business, and just appreciate the opportunity to be with you guys tonight. And when we talked about doing this Money Smart series, really the overarching idea behind this is really to create a sense of community so that you know that you're not alone. You have a support system. You have folks who want you to be successful. And we want to arm you with tools and resources, information, so that you can tap into those great resources that are available to you. And so this is our second in what will be a 9-part series. The next session will be on next Wednesday, I'm already skipping ahead to February, January the 27th. And that's going to be talking about organizational types. So we're going to be looking at different legal entity options. And so keep that in mind. We'd love to have you join us for that next session. And we really appreciate you guys being here with us this evening as we talk about banking services for small businesses. And we will start getting into some topics such as business lending. So happy Shirie can be here with us, because we're going to be tag teaming it. And she's going to be giving you some great information from a lender's perspective. And so again, thank you guys so much for being here. And I'm going to go ahead and share my screen with you, and we'll get going. And so as I mentioned, the next class for us is going to be the organizational types. That'll be next Wednesday, same time, but we're going to move to a Wednesday evening. So we hope you can make it with us. So kind of tonight, what we're going to get into is we are going to look at we're going to look at the different learning objectives for this. We're going to look, it's going to be broken into 3 sections. So we're going to look at the banking services in general. We're going to follow that by financing options and sources. And then we're going to touch on a couple of resources that you can use to help you evaluate and identify fraud and scam. So there's a few resources we want to share with you there that can help you identify those hazards that you want to avoid. But kind of as we approach tonight, what we're going to be looking at is we're going to be looking at the importance of building those long-term banking relationships. And we want to make sure that you're building those relationships and giving you some insight into that. We also want to give you some information about factors when selecting a financial institution, as well as the features and advantages of the different types of services and products that are available. And then finally, we want to look at the types of financing options and lenders that are available to you. And also getting into factors to consider when evaluating financing options. And then most importantly, this is a really key point here, ways to improve your chances of getting a loan. And so Shirie's going to spend some time with you guys talking about that, the importance of credit history, the 5 C's of credit, what does that mean to you? And then we're going to wrap it up by talking about and touching on a few topics related to avoiding small business fraud, scams, and cybersecurity risk. And so that's kind of an overview of where we're headed this evening. But where we're going to start off with is kind of looking at banking services. And as we look at banking services, we're going to touch on the factors in selecting a bank. We're going to look at different types of account services, and then other services as well that banks or financial institutions do offer, so that you'll have that framework as well. A lot of technological advances are driving changes in the banking industry that are making things very convenient for small business owners. And so more now than ever, it's so important to have those banking relationships that you can lean on your banker, draw upon their knowledge and expertise as they grow with you and your business. They can make recommendations to you to help you and to keep you in tune into what's going on, how to leverage the technology to your advantage. And I'm going to turn it over to Shirie, and she's going to give us some insight into how and why you should build a relationship with a banker and a financial institution. And she's going to share some insight into some myths that exist around about banks and small business. So I'll turn this over to Shirie.
Can't talk unless you unmute yourself. So sorry about that all. But really, Shawn hit on this. One of the most important things that you can do is establish a relationship with your banker. Even before you decide if you're going to start your small business or an entity, I would make sure that you would interview different banks, go and talk to the different loan officers. Most of us already have bank accounts. Go in and ask the branch manager or the teller at the window who in this office does small business loans, and introduce yourself to them. Even before you're ready to make a loan, to do that. It's very, very important to establish that relationship, to get to know that banker, because they want to get to know you prior to you maybe even asking to borrow money. They want to know about you. We want to know about your business. We want to know what your plans are for your business, where you want to go. There are many, many options here in the Lexington, Central Kentucky region. And as Shawn and Tyrone mentioned, I am with Community Trust Bank, which is considered a community bank, which means it is local. All of our lending decisions are made local. We are headquartered in Pikeville, Kentucky, but we have offices throughout Kentucky and West Virginia and Tennessee. So it's very important that you establish that relationship. The other thing is that the myths about bank is that that your business is too small. There is no such thing as having a business too small. Banks do make small loans. Probably the average loan that a community trust bank can make for a small business is probably $50,000 or less. You don't have to have perfect credit history, but you need to explain if there are some blips in your history so that the banker can help you with that. That's why it's really important to meet that individual prior to. And then right now, it says here that fees are not affordable. There's some awesome things that are coming down the pike with the Small Business Administration loans, with the last stimulus bill that was just passed, where the fees at this time are reduced and in some cases are just totally waived. So those things are just not true at this time. The other thing that it says is what banking services that you need. Most of them will be, you need a checking account mainly, is the most important things that you will have to have. And then what you should look for when you're choosing a bank is the relationship. You need to find a connection between you and the officer, and making sure that depending on your type of business that you, that bank does that type of lending. So at this time, there may be some banks that are not doing hospitality or hotels because of the pandemic. There may be some banks right now that aren't doing restaurants or food service because of the pandemic and with the restrictions that we have here in the state that, you know, I think we're at 50% capacity still. Someone correct me on that. I'm not really sure, but I believe we still are for inside dining. So you just need to make sure that your bank that you choose is really interested in lending to your type of business. Is there anything else you wanted to add, Shawn?
No, that's excellent, Shirie. Thank you for sharing that information. And we appreciate that so much, especially from a lender's perspective. I think that's so helpful to understand that. So we're going to springboard from that importance of a relationship to getting into some of the things to consider when you're thinking about banking services that your business may need. And one thing I failed to mention when we got started is that with each one of these sessions, we are going to, you will have a participant guide. And so what we're doing, it's a lot of great information to cover. And so when you look through the participant guide, there will be some checklists that are going to be in there, some assessments that you can take. And so we won't cover everything that is in the participant guide, but it's a great resource for you to use to look at some of that information, some additional resources. And so I would point you to pages 10 and 11 of the participant guide as you think about, there's a case study that kind of walks through it, an exercise that can help you think through the banking service needs that your particular business may have. And one of the things we would want you to think about is what banking services you feel like your business will need, as well as what should you look for when choosing a bank. And so for some examples and things to think about, like, will you, do you pay employees? Do you pay vendors? How frequently do you need to make those payments? How do your customers pay you? Are they paying you with cash? Are they paying you with credit cards, checks? Is it a combination of those things? Is mobile and online banking important to you? Do you need that type of convenience? As well as, do you need the ability to make deposits after hours? And then also, the financial institutions can help you manage cash. So if you are a business that's predominantly a cash-based business, that might be a resource you want to look into, as well as if you are taking credit card payments or want to take credit card payments, exploring what merchant services are available to you. So as you look at pages 10 and 11 in the participant guide, it's going to give you some great information to help you look at and think through the banking needs for your particular small business. So those are some things we would just want you to consider when you're thinking about what your business needs are. And also, as you think about the factors in selecting the right bank, there's a lot of research that goes into it. I know you're considering what factors are important to your particular business, and there's a lot of research that you do in terms of what your options are. And the one thing I would encourage you to do is to do that research up front, because some of the decisions you make may be more difficult to change down the road. So you want to kind of explore what the options and alternatives are to you, are available to you at the onset. And again, because later it might be more difficult to make that switch once you're well established with that particular service provider. And so when we think about some of the factors that are important to selecting the right bank or financial institution, customer service seems to be the overarching factor that really drives a decision in terms of if a bank is a good fit or not. And it's important to note that many banks do not have 24-hour customer service. And so, and just understanding that the benefits and limitations of the bank that you're wanting to work with in terms of how you're planning to utilize that service. So customer service is important, and just being in tune with what's available to you, any limitations that might exist with that particular institution. And also, we want you to think about how you wish to access your accounts and money. If you're going to need, if you need someone available to help answer questions, or if you want, and also, do you need physical access to your money? Do you want to quickly access your funds? Do you want to have virtual access to your funds? So as you're thinking about which bank is the right fit for you, those are some things to think about in terms of not just customer service, but also how you want to access your funds. Technology is just changing so quickly, and it's impacting the banking institutions. And so what we want you to think about is what features are important to you? What would you like to tap into? Do you need something that can integrate with your accounting software? So can you download transactions? You know, can you access information by an app? So how do you wish to receive information? And that's important, you know, just to make sure that that's in sync with how you wish to receive that information and what's most efficient for you as a small business owner. And then also, one thing to consider as you're looking at what is a good fit for your particular business, does that bank or institution, do they specialize in small business products and services? And with that, I mean, what I want you to think about is, do they have a suite of services, products and services for small businesses that will benefit your business as it grows? And so, as an example, Shirie shared that Community Trust Bank is very active in the SBA guaranteed loan programs. And so, as you think about your business, your growth plans, where you're at, if you want to tap into that type of resource, you know, look to see what the bank that you're considering, if they offer those types of services for your business. And so those are some things we want you to just to be mindful of and consider as you think about selecting a bank. And as you think about that, one of the things we want you to do is we want you to have confidence in wherever you select and entrust your funds to, that financial institution is insured. And so by that, I mean with the FDIC, it offers some deposit insurance that covers your funds up to $250,000. And that's per depositor per insured bank. And so that's, you know, we want you to have confidence that when you select that financial institution, that you have that, you know, assurance that up to $250,000 of your money is covered by insurance. So, and that is very important to know. That gives you some confidence in placing your funds there. And it's just important to note that that type of protection gives people the confidence that they need in terms of knowing that their funds are safe and secure. And since the FDIC began operating in 1933, which seems like a very long time ago, that no depositor has lost a penny because of, you know, because the FDIC insurance has been there. So that's a very positive thing. That backing gives you that confidence that you need. And so we want to share that information with you just so you'll have that assurance. So as you think about your banking services, the need of your particular business, there are a multitude of different account services that are available to you. And so as you think about choosing that bank and choosing the right suite of services and products that for your business is so important. As we want you to think about your particular needs as you're doing that research, as you're evaluating the services that each bank has to offer. Some things to consider, you know, do that research, look at the bank's brochures, research their website, check that out. Read the account disclosures to become familiar with what are the terms of that arrangement. Look at the fee schedules as well. And just to become acquainted with if you were to select this institution, this is kind of what it's going to be like to do business with them. And it's also important to talk to other people about the experience that they've had and see what recommendations that they would have about financial institutions that they've been working with. And as you do all of that, it's great just to kind of develop that framework of information, just to know, what the fees are going to be, and just in general, what it's going to be like to do business with that particular bank. And so what we're going to look at is talking a little bit about is looking at the cost and services of the transactions. So one of the things that you'll want to look at is if you can, the fee schedule, to look at the features and services that are available to you, what the cost of those are going to be, and look at those account disclosures. And why that's important to know is that there could be some opportunities for you to maybe bundle accounts where it might be able to waive some fees. And so again, it's so important to have that relationship with the lender so that they can help evaluate that for you to see of the different account options that are available. There might be some pros and cons with each option. Bundling might allow you to offset some of the expenses of some of the fees that are incurred with some of those accounts. And so going back to the participant guide, I would direct you to page 16 of that participant guide. And what it's going to do, it's going to give you, on the slide here, we're looking at a sample bank fee schedule. So in the participant guide, it's going to give you that example, and it's going to point out some things to look at in terms of where you could bundle to reduce fees. So check that out. And as you think about and you're doing your research, look at the fee schedule of the institutions you're considering doing business with, and look for opportunities to bundle or to reduce some of the cost of some of the account services that exist. So when we get into looking at the account services, what we want to think about is we want to look at the timing and ease and security of the transactions, and how you want to access the funds, what will be available to you, and just to realize that a lot of the times that payment transactions don't occur in real time. So there might be a lag between when funds might be available to you. So that's always good to know on the front end. So that helps you to plan and anticipate. So what we want you to do is just be mindful of that, and just to be aware of that, as well as the other options that are available to you. So for example, you might want to take advantage of direct deposit and automated clearinghouse for debit and credit card processing. There are options with debit locks that can allow you to control whether or not an ACH debit transaction has made against your business account. Some institutions offer lockbox services. That might be something that you would want to look at, as well as if you have a lot of transactions, and a remote deposit capture might be something that you wish to do. So that saves you some time and travel going to the bank and making deposits. So there's a lot of things that can help you in terms of efficiency. There's leveraging the technology that's available to help you automate things, and as well as to turn around the collection of your payments, and so and also the timing of your deposits. So those are some things we would want to point out. And what we're going to talk about next is getting into business checking. And so with that, what we want to do is that we're going to look at more at the we're going to explore the various options with your bank to determine what best meets your business needs. And so as we look at small business checking, what we want to look at are some what we're wanting to look at here are some transactions, and the volume help you determine what account is the best fit for you, what account type. And so we want you just to be aware of the different checking account options that are available, and help you kind of evaluate that. That also be aware that the banks use information to evaluate applications. So you will need to disclose some information up front, which is very normal and common when establishing a banking relationship. So we just want you to be aware that you have a lot of options in the way of business checking accounts. Also, with account services, there are business debit cards that are available to you, and there's some options with that, as well as savings accounts and certificates of deposits. So a lot of different bank types of account services are available to you. Additionally, some banks and institutions offer payroll services. Those things can help you with the ease of record keeping. It can help you with offering direct deposit options to your employees, as well as the option to separate out, and the suggestion is to separate out your operating account from your payroll account. So there are some conveniences that the bank can offer you in terms of how you're moving money between your operating account and your payroll account. And so that's, again, that relationship with the banker. They can help you explore and examine the benefits of those different arrangements. As well as you're thinking about banking services, we also want you to consider looking at managing your cash and looking at discussing options with your bank in terms of keeping detailed records, reporting all your cash income, as well as looking at increasing sales by using merchant services. So as you think about those banking services that are available to you, the bank can offer merchant services to you, which opens up the ways and options for you to receive money. So you can be looking at increasing your ability to accept funds by point of sale, or by offering gifts and preloaded cards. So there's a variety of options that are available to you. So as you think about those banking services, the cash management feature, but also the merchant service feature that's available to you. And then again, just touching on banking services, looking at accounts and transactions. Just know that, again, technology makes it easy now to download transactions, especially into accounting software if it's compatible with what the bank is using. And most commonly now, those things are very much compatible with one another. And just keep those things in mind as you're considering banking services. We want to touch on the importance of reconciling accounts. And so, now we can have the ability to have information at our fingertips on our phones. So at least definitely on a daily basis, if you have an app on your phone, you can look and monitor what's happening in your account. And we would want you to do that, but most definitely on a monthly basis, we would suggest reconciling your bank account, and your bank statements. And if you notice anything, any errors, any discrepancies, immediately talk to your financial institution, make them aware of what's going on. If anything looks suspicious to you, please report that, because you want to disclose that as soon as you discover it. And the frequency and the timing of doing those reconciliations, if you're doing them monthly, you're going to spot it, you're going to be on top of it, and you'll be able to disclose it so that the bank can help you to start identifying and minimizing any risk exposure that you may have. And so that's important to do, as well as thinking about retaining information from your online statements. On an annual basis, you would at least want to download those so you have access to them. A lot of banks now will let you go back for quite some time to have a series of statements available to you, but that's a recommendation, to consider downloading those so you have access to them in one location. So as Shirie started talking to us, as we started looking at this section on banking services, that relationship is key. And as we've talked through some of the things related to establishing banking services and looking at the different features and benefits of the different services that are available, that banking relationship is huge. And it helps you in terms of, as you're making those assessments, as you're doing research, as you're exploring what is the best fit for your business, not just now, but where your business wants to be, where you want your business to be, and where you intend to grow. And as you grow, you can look to see, to make sure and have comfort that the bank's going to be able to grow with you and flex with you and meet your needs. And so as you think about choosing that bank, think about, being able to access your funds, what's important to you, as well as looking at the features and risk associated with the different types of products that we've talked about, whether that be savings or checking accounts or business debit cards. And again, we've mentioned a couple of things in terms of increasing your business efficiency, looking at banking services to do that, whether it's payroll, cash management, or merchant processing. And again, just a reminder, just to reconcile those accounts, monitor those accounts so you can spot any activity that might need to be disclosed that could be, that might not be to your advantage. So in terms of if anything has happened to your account. So that's the first section that we're looking at tonight on the banking services, just to acquaint you with what's available. Again, I'm going to recommend that you check out your participant guide, look through there, a lot of great checklists to help you just get acquainted with more in-depth information about what we've covered here on the different features and benefits available with those different services. So what we're going to move into is we're going to move into looking at financing options and sources of financing. And we're going to spend a lot of time looking at kind of what's available, working through the different sources of financing that are available to you, and really spending some time on financing readiness so that you'll have confidence in terms of what you can do now to help prepare yourself for financing opportunities when they occur. And so what we're going to look at now is we're going to look at the different ways that small businesses can be financed. And they can look, there's a number of ways that they can be financed. And as we work through this module, we're going to be touching on those. But this is not meant to be all-inclusive, but this is just kind of an overview of the different financing options that are available to you. And so what we're going to start with, I'm going to touch on the very first way that a lot of businesses get financed. And a lot of businesses are financed through personal savings. And so if going back to the census in 2012, there was a survey of small business owners, and the personal savings was the top source that they used when they started their business. And so that is the number one form of financing for small businesses, is they will either self-finance it, they will have gifts from family members that, that are investing in their business. They may also have friends, family, others that will give them informal loans that they're paying off through the cash flow of the business. So, and one thing we want to say is that as you're starting your business, you might be at the place now where you're starting off with, what you have available to you in the way of startup capital. And what we typically see is that a lot of businesses will look at, they might start off with what they have to invest in the business, but they will leverage that, they'll grow, and they'll get to the point where they need some additional financing to help them to continue to grow. And I'm going to hand off to Shirie to talk to us about term and installment loans. So she's going to share that information with you, as well as business lines of credit, to give you some ideas of different ways to finance a small business.
Thank you, Shawn. Appreciate that. As Shawn mentioned, there are many options to financing your business. As she mentioned, many do use personal finance, savings, gift, informal loans from friends and family. When you generally come to the bank, one of the options that you have is a term or an installment loan. And those funds are used to generally purchase a piece of equipment or something specific, or like an asset for the business. The funds, as it states here, the funds are received once a loan is approved. There's a one-time disbursement. So, and it's a set amount and for a set period of time. The loan is repaid in installments with interest, generally every month. The purpose is, as stated, to finance assets. It is generally secured by that asset. And then if you want to purchase or have an additional loan for another asset, you generally are required to apply again. So just remember that it's a fixed amount for a fixed term for a fixed asset. So, and then you'll pay on that every month. So if you're looking to buy a piece of equipment, that is generally how you would do that for, or if you're interested in starting your business. If you're needing to purchase or to start a business, or if you're interested in starting a franchise, that is generally done on a term or an installment basis. So if you decide that you're going to buy a franchise, and the franchise fee is $50,000, you're planning to invest $10,000, and you need to borrow $40,000, which will also include your equipment generally in that franchise and the other assets that you need to purchase. then you would come to the bank for an installment loan for that $40,000 for that term. The other aspect is the lines of credit. It's a little bit different. It does revolve. And as I tell people, when you do a line of credit is to go up and down, not just draw the funds and then never take it down. So generally what happens if you have a contract, if you have a large contract, and say for the instance, if the contract doesn't pay you for 90 days, which is a long time, but you need funds to work your business each month. So you would be paying on that line of credit each month after you've drawn it. And then when you receive your payment from the contract, then you would pay that down. And as it states here, it is generally secured. It is used to finance any business expenses. It does require an annual credit review. So that's where it goes back to, as Shawn had mentioned, to making sure that you have your finances in order, because annually it will get reviewed. So that means you'll have to submit new personal financial statements. You'll need to submit new tax returns, and you'll also need to do year-to-date expenses. So like for right now, I have some revolving line of credits that are coming due in January for renewal. So their 2020 taxes are not done yet, so they would need to submit a 2020 balance sheet and income statement, as well as their 2019 tax returns if they haven't done that already. There is no lump sum disbursement at opening. The monthly payments are based on the outstanding balance. And generally on a revolving line of credit or lines of credit, you are required, the minimum payment is interest. So any additional that you'll pay on that each month applies to principal. But as I state, it should go up and down, up and down, up and down. The other one is business credit cards. Generally, most of my folks that use a credit card are just making purchases. So say for instance, they need to make some office supplies from the office store. They need to buy some things like that. They may need to buy some small equipment like a printer or paper or computers, that type of thing. Those are generally the things that they use for a credit card. Generally smaller purchases that they know that they're going to pay off within the next 30 days, 30 to 45 days. Most of them do not keep a lot of balances on a credit card, a business credit card. The other one is, I believe, is the special purpose loans. And those are specifically options for agriculture, for crops, livestock, farm machinery, those types of things, manufacturing for equipment needs for manufacturing companies. There are loan guarantee programs for military and veterans. And there are special programs through the SBA for exporters. And right now there are disaster loans for small businesses affected by natural disasters. So the Small Business Administration is having the EIDL loan, the Economic Injury Disaster Loans, due to the COVID pandemic, and that did open back up again. The other one is financing options are for leasing. Again, this is generally for equipment. Many of us, instead of buying a copier, we would lease a copier, because right now the technology on those are changing so much. Or we may even a printer, copier combo. Most of those are leased. Financing inventory, loans secured by inventory. So if you are have seasonal needs to purchase inventory based on your business, that's an option also. Factoring, selling accounts receivables at a discount to a third party, that's another option. Credit card sales loans or merchant cash advance loans. It's not something that we offer at Community Trust Bank, but there are entities that do that. And financing of receivables, advances on credit specifically secured by accounts receivable. That is also an option also. And generally when you're looking at financing receivables, they will want an aging of receivables, which means that they want a listing of all of your receivables those that pay within 30, 60, 90 days, and those that pay over 90 days. And they want those generally listed in the amounts on those. So that's another option for you. We'll talk a little bit about the government programs for small business, the SBA guaranteed lending programs. As I mentioned earlier, that Community Trust Bank is the #1 SBA lender for in the state of Kentucky, and has been for the past 11 years. Of entities that are headquarters in the state of Kentucky I'll call it as a community bank, and most people say community bank because Community Trust Bank is over a $4 billion bank, but it is headquartered here in Kentucky, and we are the #1 SBA lenders. And what those are is they're your traditional, either a term loan or a line of credit, which will also use the equipment that you're looking to purchase or any other, or the business that you're looking to purchase. But instead of the normal 20 to 30% that you're required to put down as a new business owner, you can put less down with the SBA guaranteed lending programs. The SBA does not lend to businesses directly. It would be a loan through the bank that would be guaranteed by the Small Business Administration. It's a great opportunity for businesses to borrow, especially if you have not been in business for 3 to 5 years, or if you're a new business. It's a great opportunity for new businesses to borrow to get started and to get on the right footing on that. So that's a great opportunity. It also mentions the SBA microloan programs. Those are generally done through a microlender. In the Lexington area, the microlender is Community Ventures Corporation. So, and those are done directly through Community Ventures. So those are not done through the bank. So again, it's very important to have a conversation with your lender, get to know your lender, get to know the people who are going to open your account, who are going to lend you money, either prior to. It's about establishing that relationship. And the other opportunities that are the USDA Rural Development Grants and Loans. Those are through the Department of Agriculture. The U.S. Department of Treasury has grants to support small businesses. And then also the Minority Business Development Agency also has opportunities for businesses to lend money. What else? There are the state and local programs that operate through here in the state of Kentucky. Those would be through the Cabinet for Economic Development. And then there is the Office of Small and Disadvantaged Business Utilization at the local and federal level. And then there are local resources, which are the Access Loan Program, which are awesome. Is there anything else you wanted to add on those, Shawn?
No. Tyrone, would you want to touch on the Access Loan Program? It's a great program that's made available through Commerce Lexington. And what that is, it's a consortium of lenders. So a group of lenders, and I think there's over 20 lenders now who are participating in the Access Loan Program. They have all agreed to look at loans that go through the vetting process for the Access Loan Program. So what that means is that if someone in the minimum loan amount is $5,000 and there's no maximum loan amount. So what that means is you would work with maybe either the Kentucky Small Business Development Center or SCORE to help you develop a business plan and supporting financials. And so they would help you get that loan proposal together. Tyra is your point person, so you would submit it to Tyrone for review, and it goes through a review process with the Access Loan Program. So a subcommittee is going to review it. They're going to give you feedback on it. It might be that you might need to make some additional tweaks to it based upon the feedback that the subcommittee has provided. But ultimately, if you make it through the subcommittee process, you have the ability to present your loan proposal, your business plan, that usually it's the executive summary of your business plan, and do about a 10 to 15 minute presentation of that business, of that executive summary, and to the lenders who might be interested in participating or looking at your loan. So this gives you a one-stop shop, so to speak, for shopping your loan. So instead of having to go to different financial institutions, the banks that have agreed to look at the loans due here, they'll signal if they're interested in it or not. And so you have the ability to shop your loan instead of having 13 different meetings with individual banks or institutions. It's really doing that presentation and then kind of working with Tyrone and the lenders who would express interest in your project. So it's not a guarantee of financing, but if you go through that vetting process, you've made it through the subcommittee process, it means that it's a proposal that has some interest for the lender. So it's not a guarantee of financing, but it does allow you to shop it. And it's really great if you are, if you're looking to, maybe you don't have that banking relationship and you're looking to kind of leverage all of those resources, all of those lenders who are participating in that so that they can look at your project. So I would just encourage you, talk to Tyrone if you have interest in that. I'm a huge fan of that program because I feel like it really gives you a lot of exposure. Back in the day, I guess they talked about Lending Tree where multiple lenders compete. So this does give you that option to get out and look at some of the, have the option to have your project looked at by a number of different banks. So Tyrone would be your point person on that. And then on the technical assistance side, you've got the Small Business Development Center as well as SCORE. And so both of those are Small Business Administration technical assistance providers. So they can work with you on developing that business plan and those financial projections free of charge. So I encourage you to tap into those resources. They're great resources. And as you think about what the financing needs for your particular business are.
And I'm going to echo Shawn's comment on that. It's a great opportunity for businesses. I mean, it's really, really, really good. Community Trust Bank participates on that, and it's a great opportunity for the business owner in order to present to up to 20 banks your proposal. But so I would reach out to Tyrone on that if that's something you're interested in.
Absolutely. So what we want to touch on next is just to give you an idea that you have a lot of different financing options for small businesses. So depending upon the stage of your business and the growth of your business, the financing options, the more mature and established that your business is, then you're going to be looking at the forms of financing Shirie was touching on, the loans, the lines of credit, those types of financing instruments that are more traditional. For the more early stage businesses, the aspiring entrepreneurs and the businesses that are kind of in that growth and the growth stage, it might be a combination of maybe some non-traditional sources and as you'll see as the business ages, that the financing options skew a little bit more towards the traditional side. So what we're going to do is look at the types of financing options that are available to you based upon the stage of your business. And what we want to stress with this slide is that everything from personal savings to family and friends, and you can see, we're touching on the crowdfunding sources, the platforms, the peer-to-peer lending, as well as getting into fintech and the angel investor and venture capital, and then the community development financial institutions and nonprofit lenders. That would be like community ventures here locally would fall into that category. And then banks and credit unions. So tonight, what we're spending a lot of time on is tapping into Shirie's expertise and looking at those traditional financing sources. But what we want you to know is that there is a multitude of ways that a business can get financed. And so sometimes it's a creative approach, and we just want you to know that there are a lot of different avenues to go when you're exploring financing a business. So what we're hoping is that as you're participating in these sessions with us, you know that you're not alone. You've got a lot of great resources. Reach out to us if you have questions. We'll be happy to answer those for you or to help navigate some of this. And just really and truly, we do want you to know that you have a great support system that wants you to be successful, that wants to answer questions. And just realize that there's a lot of different ways that businesses can be financed. And we can have conversations with you in terms of how to navigate that process. And what we're going to focus on next is Shirie's going to give us some insight. And this is, again, from that lender perspective, which is so helpful to help us understand how can we improve your chances of getting a loan. And so Shirie's going to walk us through, some things to consider there.
Thank you, Shawn.
Mhm.
I'll do that again. Thought I had muted myself again. Sorry about that. But yes, we're going to discuss improving your chances of getting a business loan. Everyone, if you're planning to get a business loan, should go and take a look at your credit so that you know what that is. So it's really important that you know what your credit score is, or if there's any blips in it, before you get to the banker. So when you fill out your business loan application and you turn in your business plan, your financial projections, your tax returns, personal and business, and your the source and use of funds for the small business loan, if there are blips in your credit, please mention it to the lender prior to. It's not like they're not going to find out. It's so much more appreciated if you tell me up front that, I filed bankruptcy 10 years ago, but since then I've, reaffirmed, and I've bought a house, bought a car, paid as agreed. Those type of things. It's very important that you have that conversation with the banker. You do need to make sure that you have a decent credit score. Am I saying that everyone's going to be, in the 800s? No, but if you're in the 550s, you need to let someone know before they pull the credit and move that forward. So you need to make sure that you are strengthening your personal and business credit, that you're separating your personal and business finances, that you don't commingle those. And we'll explain this a little bit later. Understanding the 5 C's of credit. Again, and they're mentioning it here again, building those bank relationships. Improving your chances of getting a business loan. Again, make sure that you do get a copy of your credit report and look at those. The credit score is used to assess whether you can extend credit. And there are resources if you need to help do that. Oh yeah, great. Thanks, Shawn, for pulling that up. To improving your chances of getting a business loan, the 5 C's of credit. The capacity is your ability to repay the loan. And what we're looking at is at the business loan. So the first capacity to ability to repay the loan is the revenue from the business. So we're going to be looking at the revenue of the business to pay the loan, and if there are any secondary sources of repayment. So if you have your business, if there are any other things that you're doing in addition to your business, or if there's any collateral that can be liquidated. Number 2 is collateral. What security is to repay the loan? Many people just say, well, I'm just going to use my signature. Well, we need to have some collateral. The Small Business Administration likes to have collateral, whether it's equipment, accounts receivables, real estate. They like to have collateral on the loans, generally not just, our signature. Number 3 is credit history. Yes, your credit performance of the owners. How have you performed personally on your credit? Have there been any blips? Again, mention that to the officer prior to if you've had any issues. Conditions, the terms of the loan in the business environment. So if you are a lawn service where your business is mainly during the spring and the summer, then you may want to look at having a different payment term on your loan instead of a monthly payment. So because your business is busier during the spring and summer, where it's slower during the fall and the winter. So you may want to just adjust those conditions and base the loan and a higher payment during the time when you are extremely busy. Character, integrity, reputation, references are all really important, especially if the officer doesn't know you. That's why it's important to get to know the officer and the people at the bank prior to. They want to know, do you come in every week? If there's, do you make deposits every week? Are you coming in every week? So that's one of the things that they'll ask for. Are there references? Are there people that you do business with? I am, as I mentioned, housed in Versailles, but I have customers throughout the state that have been referred to me by other businesses that I've helped in the area. Have I had met them or been, if I hadn't been referred to them, it may not have been a relationship that we had been established if they had just walked in off the street. But if it's somebody I've already known and they work with and they've given good responses to you and said that you're doing awesome, then yes, then I would recommend them. The other, we talked about not commingling. Accurate bookkeeping is a big thing, and consulting your tax advisor is the other really, really, really important thing. I know many people try to do their taxes on their own, and there are tons of software out there. One thing as a banker, I'm going to suggest to you that many of us as small business people are really good at our small business. If we own a restaurant, we're really good at cooking. If we repair cars, we're good at repairing cars. If you're not good at doing payroll, then hire a payroll service. If you're not good at doing taxes, then hire someone to do that. Contract that out. As I mentioned to some people all the time, that if you are a mechanic and you have a car service and you're repairing cars, you are probably $100 an hour person to work on that vehicle. Well, if you take that $100 an hour and spend that time working on finances and payroll, which is probably a $15 to $20 an hour function, then you're losing $80 an hour to move yourself into that position. So just realize, just focus on what you're good at. And if not, then hire someone or outsource it to someone else that can do that for you. You'd be a happier business person, and your banker and those down the line would be more than happy to assist you with that. So anything else, Shawn?
No, thank you so much, Shirie, for that insight. That's so helpful, especially when you're giving us that advice from the bank, from the banker, that lender perspective. It's huge. To help us see things through your eyes is really helpful. And we appreciate that so much.
Thank you.
So as we're kind of wrapping up this section, just a few points to remember is just to know that there are all kinds of different financing options available to you, beginning with your own savings. And that's generally how a lot of small businesses get started. And as you think about, as you're evaluating what your financing options are, just know that you have a lot of different ways that you can approach getting financing. And so, as well as keeping in mind that there are some government enhancement programs, like Shirie mentioned, the Small Business Administration, the USDA is another example of that. And even at the state level, we have a state small business credit initiative. So there's really, and I keep going back to this, but it's so important to tap into, like talking to Tyrone or talking to Shirie or reaching out, and because we want to help you create a network of resources that you can turn to if you want to evaluate what are some of these options that are available to me. And as you think about all of that and you evaluate kind of what the advantages and the disadvantages are, and more than likely you're going to come across a couple of what we call fintech options, and those would be the online options. And so what we want to think, what we want you to consider is kind of what are the advantages of those local resources. Like as Shirie mentioned, she's housed in Versailles. And so the local resources can be huge because you're establishing that local relationship. And so we don't want to discount, what's available through the fintech arena, but we just want you to know that you can tap into local resources that we can help you evaluate and, and explore what options could be available to you. And the good news is you do have options. So there's a lot to consider. And Shirie, shared with us how to improve our chances of getting a loan. So that insight that she has provided is invaluable, especially that lender feedback is huge. And so she's giving us some insight into how she approaches looking at loan proposals and what she's taken into consideration. That those tips are so helpful. And so, and the key thing we would want to stress is that, when you go talk to, when you approach a lender, we want you to be prepared. We want you to have a look at your credit score, just to know kind of how you're looking. As Shirie said, if there's anything that's going on, be prepared to disclose that information. It's going to come out eventually, as she shared. So we want you to think about, improving your chances of getting a loan. And we, again, want you just to know that all kinds of resources. And so we're going to follow up with you and make sure you have a copy of the participant guide. There's a financing checklist in the participant guide, as well as a loan readiness checklist. And so we definitely want you to tap into those resources and just so that you have as much information as possible, because we want you just to have knowledge and resources to help you as you evaluate what options are available to you. So that's going to wrap us up on the financing options. And kind of what we want to touch on is just some tips on avoiding fraud and scam, because as you're looking at your business and you're looking at financing options, we want just to give you a couple of resources that you can go to that are government resources that can help you become more familiar with what are some of the common pitfalls that exist and what are some of the things that are happening. And it's like, it's almost like every day that the folks who are trying to get information from us get more creative every day, and it seems like that there's some new approach that they're using to try and get to personal information. The FBI has a lot of really good resources. So if you go to fbi.gov, the small business, and you do a search with small businesses, that is a great resource to help you evaluate what's available to you and just some things to be aware of. Some typical approaches would be data breaches that we all hear about. So if you might want to track your email address to make sure that it is monitored, so that Firefox is an example of a browser that will let you track an email address, so that if there is a data breach and your information's been exposed, they will let you know about it. And recently that happened to me with Pluto. So I don't know if you are familiar with the app Pluto TV. So I received an email that said, hey, Pluto TV had a data breach that exposed the email address and passwords of all X number of users. And so my email address was in that pool of users. So data breaches happen more frequently. So FBI.gov, search small businesses, and that's going to give you some insight into what's happening in the space of, the frauds that are happening and the scams. And just, that ounce of prevention is huge, and just knowledge and awareness of what is happening in that space. The other federal government resource is the Federal Trade Commission, and that's very helpful in terms of business and consumer education in terms of how to avoid scams. And they also give a lot of great information about common scams that target small businesses. So we want you to tap into that resource and, just to be aware of what some of those are, just to arm you with that knowledge. And of course, they have a lot of really great publications that are available to you, as well as videos and other resources. So if you go to ftc.gov and you do the keyword search small business, you're going to be able to tap into those resources. So keep in mind the FBI and Federal Trade Commission, a wealth of information to help you in terms of avoiding scams and fraud that are prevalent today and seem to be becoming more prevalent every day. So what I want to do is open it up to any questions that you guys may have. And we've been monitoring the chat, and we've had a couple of questions come through, and we're going to follow up with you guys on that participant guide. And so just so we'll get that out to you all, but while we have Shirie with us, if we can come off of mute maybe, and if you want to ask any questions, just to draw upon her expertise, you're welcome to do that. And the other thing I would say, if you don't have any questions this evening, if anything comes up, reach out to us and just let us know. But just appreciate so much you being here with us this evening and looking at small business services available to businesses and exploring that with us, spending some time with Shirie looking at the different financing options that are available, how to be ready for a loan, and what preparedness steps you can take today. And I want to just again, we'll share that participant guide with you guys and those resources. There will be an evaluation, and we so much appreciate your feedback. It's very helpful to us, and just invite you to give us feedback. We're very open to that. And again, we'll share that information with you. Check out the participant guide. The great checklists and assessments that are there are very helpful. And most importantly, we want to thank you for spending some time with us this evening, just to kind of explore these, the information about small business and banking services.
Thank you all very much.
Thanks so much, everyone.